Hey everyone, welcome to Live Trading Thursday. David Verbruggen with you here. We've got some good things to look at in the market, but as you guys know, we want to get your tickers in there, right? I want to be able to analyze the trades that you want to look at, trades that you're in maybe, or maybe trades that you're considering. So go ahead and get those stocks, those tickers in there so that we can take a look at that together. And as always, the more detail you give, the better, right? If you just give me a ticker, there's only so much I can do with that. But if you give me a ticker and a specific strategy that you're going to try and structure a specific way, all of a sudden the analyzation can get a whole lot better. So go ahead and start loading up the comment box for us. Remember, you're going to want to get those in soon. Sometimes I get tickers at the very end and it's like, I'm sorry, we're not going to get to them right now. So, yep, go ahead and get those in. And keep in mind, guys, that all the examples that we're going to view in this live trading session should be viewed for educational purposes only and not taken as trading or investment advice. All right, let's go ahead and share my screen here. We're looking at the S&P. Always want to take a good look at the overall market before we dive in here. I had to do some readjusting on some lines, right? Because, as we, over the last week, got kind of ugly and really started moving down more significantly, obviously the uptrend that we were in got broken here. And so now actually there's several different patterns I want to point out, right? Because there's several patterns that we're seeing in play here that point towards more of a move down, right? First of all, big picture, you got this high, this low, lower high, lower low. So the start of a downtrend, right? You see this downtrending resistance line here. I just cloned that line and brought it down here for a potential downtrending support line. Only two touches really on there right now. That doesn't count right there, but only two pivots. So we'll see. But so far today, nice move up off of this downtrending line. All right. So that's the first thing that we're kind of seeing is this wider downtrend, right? Another thing we're seeing more recently here, you've got this M pattern. That was kind of on top of the 50-day. And then once it broke that, it broke it pretty convincingly, right? I mean, these 2 days were monster moves down, right? And we haven't recovered yet. We haven't been above the 5 EMA yet since then. So it's gotten pretty ugly after that M pattern that was in play. Another one to kind of consider, and this might be a little harder to view. It's showing better on some different charts, but we have a potential shoulder, head, and shoulder. It's kind of one of those head and shoulders, right? So a much bigger shoulder on this side, of course, but you kind of have that head and shoulders look, which also points to a move to the downside. And if I were to draw a line kind of like where that head and shoulders, what it's sitting on, if it's sitting on this line, you got this shoulder, head, shoulder, we've moved down from there, right? And if we've moved down from there and we're popping back up, is this a move back up to this downtrending resistance line, or is this going to hit this line right here and do a kiss goodbye and move down? So there's a potential of that setting up as well. With all that being said, lots of things in play, lots of different patterns that are all kind of pointing to the same thing, which shows that we are most likely in for more bearish action, right? So more bearish action. In fact, in the last 2 months from the high right there, that was July 27th. In the last 2 months, we've already been down 7%. And that's just been to kind of formulate these patterns. So if things really get going to the downside, we could be in for more significant moves down, and they could happen pretty quickly, right? I wish we could kind of foresee, okay, what's going to happen in the next 2 months, right? Everyone, of course, starts talking about, October's coming, or, September, October. That's the time when things start to get ugly in the market, and it can. And I mean, there's some historical data showing that's when some of these crashes have happened. The Great Depression, that started in the fall. I don't think the dot-com crash did, but the 2008, that got really ugly in the fall. So anyways, there's some, some truth to that in a way. I'm not saying that because it's fall, it has to move down. I mean, look at 2021. It's not what happened then. But anyways, Moving on from that, what do we do with this market that is starting to move down and has many different indicators? Yeah, Joseph again mentioning the kiss goodbye. That's that potential kiss goodbye pattern. So what could be happening here? What do we need to do? We need to be looking for trades that are moving down as well, right? We don't want to trade against the trend or against the ocean of stocks, if you will, the market tone. We don't want to trade against the market tone. Think about it this way. If you're swimming in the ocean, you're trying to get from point A to point B, is it better to go with the current or against the current, right? If we're going to be loading up on bullish trades when the overall market tone is negative or bearish, then aren't we swimming against the current? Doesn't that make it harder? So maybe it's just better to go with the current and start looking for some bearish setups. Now, with the pattern where it is right now, if we're looking at this as a downtrend and we're expecting it to slowly make its way back up to this line and then come back down, could be a challenge to find good buy points right now, right? So we're going to have to get creative. We're just really going to have to use the technology and the tools at our disposal to find good, to find many bearish setups and find the best ones of those. And we may even get to a point where we say, you know what? There's not a trade out there today that is at a great buy point. Maybe we find several that we want to keep an eye on for the week, but there may not be one today. And that's okay too. That's okay too. So that's kind of what we're going to be looking at today. Some Joseph is asking what moving average is green. Yeah, so let me zoom in here. 3 month. You can see this dashed green line. That's the 5-day. That's my 5-day exponential moving average. I like having that one on the chart. You can see this is a good example up here. When it's pretty hot, it tends to ride the 5-day. See how the 5-day for that whole week was support, and then same on the downside. Sometimes it ends up turning into resistance. So I like having the 5-day on my chart. As an addition to the standard 10, 20, 50 that we teach. But there's many others that have that on their chart as well. Yep. Perfect. Joseph also saying energy, soon demand will skyrocket for home heating needs. Yeah, you're absolutely right that as we get closer to the winter time and energy, there's a pickup in demand. It doesn't necessarily mean that the price of the stock will move up, right? Because it's already priced in. Everyone knows winter's coming. Everyone knows that energy, people are going to need more energy, right? Now, if there's a series of catastrophic winter storms and people are leaving their heaters on 24/7 and the demand is greater than what was anticipated, and therefore those companies are bringing in more money, yes, I think you would see the stock increase. And vice versa. If it ends up being a mild winter and people, of course, are using more energy than maybe they were in the summertime, but maybe it's not as much as what was anticipated, then you might see the stock decline. So it all has to do, Joseph, with what is anticipated, what is the expectation or the forecast, right? So there you go. All right, guys. I see there's 9 of you on, so that's fantastic. Go ahead and get some tickers in that you want to look at or consider. And while we're waiting for those, I'm going to show you one of the ways that I like to look for downtrends. We've done this before, but we're going to do it again here because it really is a fantastic tool. I'm going to come up to the Find tab here, going to highlight this, and then click on Scans. And so in the scans, I like to go to the outlook. That's one of my favorite places. It's just very simple. Do we have a bullish outlook, bearish outlook, or is it stagnant, volatile? And as we just talked about, the market is looking more bearish than anything right now. So I'm going to click on bearish, and it's going to bring up all these different scans. Again, even just within the bearish outlook, we've got, 8 different types of scans in here. And you can look at all these. I mean, if you're curious as to, okay, what is a, chart pattern bearish descending triangle? You can click the little eye here and you can read all about that and see exactly what that is looking for. And then you can click on it to see the 18 different results, right? If you want to learn, well, what is a death cross? That sounds kind of, I don't know, morbid. Then, click on that and figure it out. It's all listed here what what it is and what the platform is looking for. But you know me by now, I like to look at the chart pattern declining channel. It's essentially a downtrend that we're looking at, right? And there's more results in here. So there's more stocks to pick from. So 72 different ones. We're going to click on that. But, maybe I'm just not feeling like I want to work so super hard. And I don't want to necessarily go look through 72 different tickers. So what can we do then? Well, there's several things we can do. Actually, there's a filter option. If you click on that, you could filter for things like price. Oh, maybe I want to have only stocks that are actually didn't plan on doing this, so I hope I do this the right way here. Only stocks that are $10 or more, right? If I'm going to filter for that, I can apply that. And then it should filter out ones that are less than $10, right? And I don't see anything less than $10 in there right now. So that's great. Another way you can do it, and that I like to do, is I'm just going to click the check box button right there. I'm going to highlight all of them. And now I want to unclick the ones that have positive fundamentals, right? So Disney, I don't want to look at that one. It's got positive fundamentals. And so those are probably going to be your stronger stocks in these of this group. And if they're stronger, I don't want to necessarily bet against it, if you will, or I should say trade against it as a bearish trade. So I'm going to unclick all these green ones that have the green fundamentals box. That's the last box on the right here. And hopefully it doesn't take me too long. I may not click them all just for the sake of time right here. So yeah, you just do that. You unclick the green ones. We'll just leave it there for now. And then when you're done with that, you can go ahead and click the beaker button at the top right here. And that's going to send them all to research. Now, I know the top half of this group or so are going to have fundamentals that are either yellow or red. And so then we can just start looking at this. Okay, here we go. TSM, Taiwan Semiconductor Manufacturing. What do we got here? Well, it's definitely a downtrend. Can we get some good lines on here? I don't know. I mean, it's pretty steep. We can try that line right there. Guess what? It's pulling up. Maybe if it can pull up quickly and hit this line and roll down, we could do a quick bearish trade before earnings, right? Always got to remember about earnings, right? Earnings is just 2 weeks away on this one. But if, let's say it closes here today, tomorrow puts up another nice green, clear candle, and then next week, early next week, if it starts to fail there, we could be looking at a bearish opportunity, right? And many times our bearish trades, they might only be a few days or up to a week, right? So there could still be time. If that pattern continues to develop how we hope it to develop, there could still be time before that earnings report. JNJ, here's another one moving down here. I'm not a huge fan of that pattern. It hasn't really formed the downtrend completely yet. That's pretty steep right there. You can keep an eye on this one, but I'd like to see more consistency in that pattern. Same with Alibaba here. Let's get some lines. Try that line right there. But I mean, you do have lower highs and lower lows in play. Still a ways away from our downtrend resistance line. All reds, though. Look at that. All reds. You can actually search for that too if you're curious and you just, hey, I want to see all the reds. There you go. You can just look for that in the search. ABT, dang, look at this. All red candles up until today. So the only bad thing, man, if you had gotten into a put as it rolled down from that 20-day, that'd be incredible, right? But the only bad thing about this is it's going to be a while before it comes back up. Maybe if we get a couple of good clear candles, we could hit that 20-day. And then again, earnings on the 18th there. So guys, this is, we're not going to go through this whole list, but this is kind of, there you go. That's a good one. AMD. I already got this downtrending resistance line on there. Nice move up today. So far, this is my favorite one to watch, right? It's not ready yet, but maybe even by tomorrow or so, If this thing opens at this line, starts moving down, you could be looking at a put, bear call, several different opportunities in there. So again, I'm not going to go through this whole list, but I just wanted to show you guys kind of a process to go look for trades, right? And we already found one here just in a matter of a couple minutes that it's a really solid candidate. Not at a buy point today, but could be imminently in the next few trading days. So, and earnings is not even in the way. That's good. So throw that one on a watch list. Keep an eye on that so that at least you can paper trade it if it makes a good move for us. All right, Daryl wants to look at NCLH, I think it is. Let's take a look at NCLH. All right, Norwegian Cruise Lines. All right. Yeah, this one also moving down. Interesting one here. Look at this 50-day, and it was some resistance just it was about a week ago or so. Starting to move back up, and if we can get another failure at the 50-day, there's the potential for a trade right there. I want to get another line on here. I'm seeing this line as well. So you got the gap line there, and that was some resistance in here. Again, resistance that coincided with the 50-day, so that's cool. So even if it moves up above the 50-day a little bit, if it happens to tag that line and start to move down, you could be looking at a bearish opportunity as well. So that's definitely a decent one to keep an eye on, Daryl. Again, it's kind of like AMD, right? Good one to keep an eye on. Not ready yet, but watch it, and we might be able to get a trade on that one later on, right? So thanks for bringing that one up. Benjamin wants to look at PSQ and SH. Yeah, okay, this is a good one to talk about here. Let's start with, PSQ. What is PSQ? This is the inverse ETF for the NASDAQ, right? Most of us are familiar with QQQ. That's essentially an ETF following the NASDAQ. PSQ is the inverse. So when QQQ is going down, PSQ will be moving up. Okay. It's kind of a brain twister, right? If we're going to get bullish on this inverse ETF, we're actually getting bearish on the market, right? Okay. So let's look at QQQ just to compare and contrast here. Let me hide the lines just to make that a little more clear. So here's QQQ. And if I click on PSQ, it is going to be the exact opposite. So you can see now you kind of have more of a W action going versus what was that M action going there, right? And as QQQ had been in a nice uptrend for a while, PSQ had been in a downtrend for a while. You can see this line, and that downtrend has been broken. So yes, Benjamin's talking about long-term, just a longer-term holding on it, and also looking at SH. SH is similar idea. It's going to be the inverse of the SPY. So the SPY is the ETF on the overall market, right, on the S&P 500, and SH is just going to be the inverse as well. It's going to have a very similar looking pattern, right, similar looking pattern to PSQ. But that's one of the ways that we can do this, right? So even if let's say we're not an options trader yet. Let's say that we haven't gone through step 2 or step 3 or anything like that, and we're just focusing on stocks, which is perfectly okay, by the way. It's going to be very hard to trade in a bear market, but you can take advantage of some of these inverse ETFs, and you can trade them just like stocks. You can come in here, you can buy shares of these inverse ETFs. And when the market moves down and the inverse ETF moves up, you're making money if you own shares of that inverse ETF. So that's a great one to bring up, Benjamin. Thank you for that. All right, perfect, guys. I want to let you guys know about step 3 that is going to be taught next weekend. And if you want more information on that, go to events@tradeway.com. And we can get you some information on that. This is where we're all going to be learning about credit spreads, right? Now we're not dealing with just one leg of an option. We're dealing with two legs of an option to create a situation where we have a higher probability trade as compared to a regular stock trade. And we're aiming for potentially even a higher ROI as compared to that stock trade. So why not, right? Credit spreads are a favorite among professional traders because of the advantages that they offer us. So this really is a fantastic course, guys. I got the opportunity to lead this one several months ago. I'm not sure who's leading it this or next weekend, but it's a great course. So highly encourage you to check that out. Again, events@treyway.com for more information on that step 3 course. All right, guys. Well, I'll be seeing you guys next week. And until then, have a good one.